what the government does not want you to know about your financial future.
Welcome, curious minds and skeptics alike, to a deep dive into the meticulously crafted financial narratives that subtly, yet profoundly, shape your destiny. Today, we embark upon a journey to unearth precisely what the government does not want you to know about your financial future. Forget the bland economic reports and the soothing promises of stability. We are pulling back the curtain on the sleight of hand, the convenient omissions, and the outright misdirections that, intentional or not, leave you perpetually playing catch-up. Prepare to have your long-held assumptions about security, savings, and retirement thoroughly, and perhaps uncomfortably, challenged. Throughout this expose, we shall meticulously dissect the illusion of fiscal stability, revealing how the supposed safety net they champion is often a sieve, designed not to shield you from harm, but merely to catch the largest pieces of your economic distress. We will then turn our acidic gaze upon inflation, that insidious silent tax which perpetually erodes your hard-earned savings, all while they hope you remain blissfully ignorant of its slow, persistent theft. Furthermore, the cherished concept of your pension will be laid bare as a governmental IOYOU. It's not the gold mine you envisioned, its solvency often resting upon a precarious generational tightrope. Finally, we will observe the curious debt dance of public spending and explore how its rhythm dictates the very pulse of your private future, and crucially, the contents of your wallet. This is not a session for the faint of heart, nor for those content to outsource their financial autonomy to distant, well-meaning, or perhaps not so well-meaning bureaucrats. This is a call to intellectual arms, an invitation to unlearn their lessons and to reclaim mastery over your own wealth. We will not merely complain. We will equip you with the critical understanding necessary to navigate this complex landscape, empowering you to build a financial future that is truly yours, robust and resilient, rather than perpetually tethered to the whims of the political and economic machine. Your financial freedom begins with knowing the uncomfortable truths they prefer remain hidden.
The grand illusion of fiscal stability. Your safety net is a sieve, not a shield.
Today, we are not just scratching the surface. We are diving headfirst into the murky waters of official pronouncements regarding your economic well-being. Prepare yourselves, for we begin our journey with a concept frequently bandied about in hushed, reverent tones by politicians and financial news anchors alike: fiscal stability. They speak of it as if it were a tangible, protective shield, a robust bastion against the ravages of economic uncertainty. But let us be utterly frank. What they present as an impenetrable fortress is, in reality, little more than the grand illusion of fiscal stability. Your safety net is a sieve, not a shield. You see, dear viewer, the government, bless its well-intentioned or perhaps strategically manipulative heart, loves to assure you that everything is perfectly under control. They rattle off statistics, cite complex economic models, and issue soothing press releases designed to lull you into a false sense of security. The economy is strong, they proclaim. Inflation is transitory, they insist. Your future is secure, they whisper, like a benevolent parent promising candy after a doctor's visit. This narrative of fiscal stability is a masterclass in psychological conditioning. It encourages you to trust the system, to believe that a vast, invisible hand is diligently safeguarding your hard-earned money and your retirement prospects. It is a wonderfully comforting thought, is it not? A paternalistic embrace that allows you to outsource the terrifying burden of personal financial responsibility to a higher authority. Except, of course, that authority is far too busy juggling its own precarious budgets, political ambitions, and the incessant demands of its myriad stakeholders to truly prioritize your individual financial resilience. Let us dissect this safety net they so proudly dangle before you. What does it consist of? Perhaps Social Security benefits, unemployment insurance, various welfare programs, and a labyrinth of regulations designed to prevent another global financial meltdown. On paper, it sounds rather robust, does it not? A series of strategically placed trampolines and padded walls ready to catch you should you stumble. Yet, when you examine it closely, this net reveals itself to be less of a sturdy fishing net and more of a worn-out colander, riddled with holes and barely capable of retaining anything of substantial value. It is designed to catch you just above total destitution, to prevent you from becoming an immediate, visible problem on the streets, but certainly not to ensure a comfortable, dignified existence, let alone propel you towards financial independence. The holes in this safety net are numerous and strategically placed. Consider, for instance, the ever-present erosion of purchasing power due to inflation, a topic we shall explore in much more acidic detail later. Even if you manage to qualify for some government assistance, or if your retirement savings are indeed tied to a government-managed fund, the real value of those dollars is constantly being nibbled away. The government might boast about maintaining economic growth, but if that growth is perpetually outpaced by the cost of living, your personal stability is an illusion. Your dollar buys less and less, quietly transferring wealth from your pocket to, well, somewhere else. It is a slow, insidious wealth transfer that rarely makes headlines, precisely because it is too complex, too abstract, and frankly, too inconvenient for the official narrative. Furthermore, accessing this supposed safety net is often a bureaucratic odyssey designed to test the patience of a saint and the determination of a seasoned tax auditor. The paperwork, the eligibility criteria, the waiting periods, the constant threat of policy changes, it is a gauntlet one must navigate to claim even the most basic assistance. It is as if the net itself is actively trying to repel you, only grudgingly allowing a few thoroughly exhausted individuals to cling to its frayed edges. And even then, the support offered is rarely enough to truly shield you from the actual impact of financial hardship. It simply softens the fall enough to prevent outright catastrophe, leaving you dazed, bruised, and still very much exposed to the elements. This is why we say your safety net is a sieve, not a shield. A shield actively deflects danger, protecting you from harm. A sieve, however, allows most things to pass through, retaining only the largest, most immediate elements, and letting the valuable, smaller pieces like your future purchasing power or peace of mind simply drain away. The government's version of fiscal stability is often about macro-level indicators, about keeping the entire ship from sinking immediately, not about ensuring every single passenger has a comfortable cabin or a secure life raft. They are more concerned with the optics of the ship's stability than with the individual lifeboats. The grand illusion, then, is the notion that you can passively rely on these systems for your prosperity. It breeds complacency, a dangerous belief that they will take care of it, allowing you to neglect your own diligent financial planning. It is a cozy lie, but one that comes at a steep price: your autonomy, your security, and ultimately your freedom. Understanding this illusion is the critical first step towards disengaging from their narrative and beginning to construct your own, far more resilient financial shield. Because, dear viewer, when the storm truly hits, you will find that a government-issued sieve offers remarkably little protection.
Inflation, the silent tax on your savings.
Having just dismantled the myth of the safety net as a sturdy shield and exposed it for the threadbare sieve it truly is, we now pivot to another masterstroke in the grand illusion of fiscal stability. This, dear viewer, is the weapon of choice for governments worldwide when they wish to discreetly lighten your wallet without the messy business of, say, directly raising income taxes. We are talking, of course, about inflation, the silent tax on your savings they hope you do not notice. Let us begin with a simple, almost poetic definition. Inflation is not merely when the price of your morning coffee suddenly skyrockets. Oh no, that is merely a symptom. Inflation is the insidious, persistent erosion of your money's purchasing power. It is the economic equivalent of a slow leak in your financial tires. You do not notice it immediately, but eventually you are stranded wondering why your carefully accumulated wealth no longer gets you as far as it once did. It is the phenomenon where the value of a single dollar today buys less than it did yesterday, and significantly less than it will tomorrow. And while economists will provide you with a multitude of convoluted explanations involving supply chains, demand shocks, and esoteric monetary policies, the stark reality is this: someone, somewhere, is benefiting from your money becoming worth less. Often, that someone wears a suit and works in a government building or a central bank. Think of it as a stealth tax, a levy imposed not on your income, but on your very solvency. When the government, or its appointed central bankers, decides to print more money or pump funds into the economy, or keep interest rates artificially low for extended periods, they are not just stimulating growth. They are implicitly devaluing every single dollar you possess. Your savings account, that bastion of your future security, suddenly becomes a slowly melting ice cube. You see the same number of dollars, but those dollars are increasingly impotent. It is not an overt seizure of your assets. It is a gradual, almost polite robbery by attrition. And the beauty of it, from a government's perspective, is that most people do not understand it, or, crucially, do not connect it directly to their elected officials. They blame greedy corporations, global events, or supply chain issues, rather than the fundamental monetary policies that grease the wheels of this wealth transfer. The sarcasm here is not merely for comedic effect. It is a critical lens through which to view official pronouncements. When central bank governors speak of a healthy inflation target of 2%, they are essentially telling you that they aim to make your money worth 2% less every year. That is 2% of your hard work, your deferred gratification, your financial prudence, vanishing into the ether annually. Over a decade, that is a significant chunk of your purchasing power gone, without you ever having filled out an extra tax form. It is a brilliant strategy for any entity burdened with massive debt, like, say, most governments. When the currency depreciates, the real value of their debt also shrinks. So, while they might pay back the same number of dollars, those dollars are worth far less than the ones they initially borrowed. It is a win-win for the indebted borrower and a lose-lose for the diligent saver. This is why they hope you do not notice. They hope you remain focused on nominal figures, the number of dollars in your bank account, salary figure on your paycheck, rather than the true inflation-adjusted purchasing power. They hope you do not realize that, while your income might slowly creep up, the cost of housing, healthcare, education, and even basic groceries is often accelerating at a far faster pace. They hope you remain complacent, trusting that the experts have it all in hand, rather than demanding accountability for policies that systematically erode your financial security. The emotional trigger here is betrayal, the realization that the very institutions sworn to protect your well-being are, through the mechanism of inflation, subtly taxing your future. Understanding inflation is not about becoming a doomsday prepper. It is about becoming financially literate and strategically defensive. It is about recognizing that your cash, sitting idly in a low-interest savings account, is not merely stagnant, it is actively depreciating. It is about realizing that while everyone debates income tax rates, capital gains taxes, and property taxes, the most universal and arguably most insidious tax of all is silently working in the background, perpetually chipping away at the foundation of your financial future. So, the next time you hear an official confidently declare that inflation is under control, or that a modest level of inflation is healthy for the economy, remember this: they are essentially telling you that your money is on a controlled, downward trajectory of value. They are saying it with a straight face, hoping you are too busy cheering for the nominal GDP numbers to notice the real, tangible impact on your personal bottom line. Because once you understand the silent tax, you can begin to strategize how to shield your savings, protect your purchasing power, and ultimately, refuse to be a passive victim in their grand economic illusion. The game, dear viewer, is afoot. And the first rule is, never trust that what they say is good for the economy is automatically good for your bank account.
The pension puzzle.
Having just navigated the treacherous currents of the grand illusion of fiscal stability and survived the insidious stealth taxation known as inflation, we now arrive at a topic that touches the very core of your future aspirations, your golden years. You work tirelessly, you contribute dutifully, and you envision a time when the fruits of your labor will allow you to relax, travel, and perhaps even purchase something frivolous without a pang of guilt. For many, the bedrock of this dream is their pension or government-backed retirement scheme. You believe it is a sacred trust, a dedicated fund growing steadily, awaiting your well-deserved repose. Prepare for a rather abrupt awakening, because we are here to discuss the pension puzzle. Why your retirement fund might be a government IOYOU, not a gold mine. Let us be honest. The very phrase pension fund conjures images of robust, almost impenetrable vaults, overflowing with decades of prudent investments, waiting patiently for your retirement party. It implies a dedicated, secure pot of money, diligently stewarded on your behalf. The government, with its charmingly vague assurances and impenetrable jargon, does little to disabuse you of this comforting notion. They want you to believe that your regular contributions are tucked away safely, accruing interest, and will be there, shiny and abundant. When you finally decide to hang up your professional hat, this, my friends, is where the puzzle begins, and where the stark reality often diverges sharply from the bedtime stories you have been told. For many government-run or government-backed retirement systems, what you are essentially contributing to is not a personal savings account with your name on it, but rather a vast intergenerational transfer payment scheme. In simpler, more acidic terms, it is a sophisticated IOYOU system. Your current contributions are not being saved for your future retirement. They are being used to pay for the retirement benefits of today's retirees. You are quite literally paying it forward with the unspoken, yet absolutely crucial, assumption that a younger generation will eventually pay it forward for you. It is a financial chain letter, sanctioned by the state, and its solvency depends entirely upon a perpetually expanding population of productive workers supporting an ever-growing cohort of retirees. What could possibly go wrong? The problem, as any astute observer of demographics will readily inform you, is that populations are not always perpetually expanding, especially in developed nations. Birth rates decline, life expectancies increase, and suddenly, you have fewer young contributors supporting more elderly beneficiaries. The math, even for those of us who struggled with advanced algebra, quickly becomes rather dismal. The IOYOU starts to look less like a solid promise and more like a hopeful wish, written on increasingly fragile parchment. The government does not want you to focus on this arithmetic. They want you to trust the system, to continue contributing, and to believe in the enduring magic of legislative decree to make up any shortfalls. Furthermore, this IOU is not immune to the whims of politics or the exigencies of economic downturns. What was promised to you in your working years can be altered, amended, or even significantly reduced by future legislatures facing inconvenient budgetary realities. Benefit eligibility ages can be pushed back, cost of living adjustments can be trimmed, and the very formula used to calculate your payout can be tweaked. All in the name of fiscal responsibility or system sustainability. This is not a conspiracy theory. It is a historical pattern. The gold mine you envision suddenly begins to feel less like a secured asset and more like a political football, tossed about by whoever happens to be in power at any given moment. Your investment becomes subject to the unpredictable vagaries of electoral cycles and bureaucratic priorities, rather than sound financial principles. The emotional trigger here is betrayal, a deep-seated fear that your years of dutiful contributions will not be reciprocated. It is the chilling realization that the safety and security you believed you were building for yourself might instead be contingent upon factors entirely outside your control, subject to the political winds of future generations. This understanding is crucial because it forces you to confront the reality that passive reliance on government-backed pensions for your entire retirement planning is, frankly, an act of extraordinary optimism, if not outright naivety. Therefore, while these systems play a role, and for many, a necessary one, it is imperative to view them not as your sole gold mine, but as one component, an IOYOU, from a sometimes unreliable debtor. This perspective compels you to take personal ownership of your financial future, to diversify your retirement planning beyond governmental promises, and to build your own, more robust and self-directed gold mines. They do not want you to scrutinize the sustainability of these systems, because questioning them undermines public trust and creates political headaches. But your financial future is far too important to be built upon a foundation of convenient fictions. Understanding the pension puzzle is the first step towards building a retirement that is truly yours, secure and independent, rather than a mere promissory note from a government that might, at best, pay you back with significantly devalued currency.
The debt dance. How public spending dictates your private future.
All right, esteemed chroniclers of impending financial doom and survivors of governmental fiscal narratives. We have navigated the illusion of stability and weathered the silent tax of inflation. We have even peered into the murky depths of your pension's promissory notes. Now, let us turn our attention to the spectacle that truly encapsulates the beautiful chaos of national economics, the debt dance. How public spending dictates your private future and your wallet. Imagine, if you will, a grand ballroom. On one side, you have the government, perpetually dressed for a lavish party, waltzing with a seemingly endless supply of funds. On the other side, you, the hard-working citizen, are perpetually stuck paying the cover charge, buying the drinks, and occasionally picking up the tab for the government's increasingly extravagant tastes. This, in essence, is the debt dance. It is a performance where the government leads with an outstretched hand, promising prosperity. In public services, while your wallet is the unwitting dance partner, subtly but firmly being steered towards depletion. Governments, bless their fiscally irresponsible hearts, love to spend. They spend on roads, on schools, on defense, on healthcare, on social programs, and occasionally on pet projects that mysteriously benefit a donor's district. This is not inherently evil. Public services are necessary. The issue arises when the spending consistently outpaces the revenue. When the government spends more than it takes in through taxation, it incurs a budget deficit. And what does a government do when it has a deficit? It borrows, issues bonds, essentially asking people, banks, and even other countries for a loan. Thus, the national debt grows. This is not complex rocket science. It's basic household budgeting. Only on a scale so grand it becomes abstract enough to ignore. They often justify this borrowing with grand pronouncements about investing in the future, stimulating the economy, or responding to unforeseen crises. And while there are indeed legitimate times for deficit spending, the line between prudent investment and reckless indulgence becomes extraordinarily blurry, particularly when the piper always gets paid eventually. The problem for you, the individual, is that this accumulated public spending, this colossal national debt, is not some abstract number floating in the ether. It is your future obligation. It is a mortgage on the nation, and you, dear taxpayer, are a co-signer, whether you like it or not. How exactly does this grand debt dance dictate your private future? Let us count the ways because they are numerous and equally annoying. Firstly, there is the obvious and most direct impact: future taxation. The government eventually must pay back its debts plus interest. And where does that money come from? From you, of course. So, every dollar borrowed today for that new infrastructure project, that social program expansion, or that tax cut for a special interest group represents a future tax burden on you, your children, and even your grandchildren. It is a generational wealth transfer, but not in the way anyone actually wants. You are essentially working to fund past governmental excesses. Secondly, there is the less obvious, but equally insidious impact of inflation. We just covered how inflation is a silent tax, right? Well, massive government borrowing can be a significant contributor to inflationary pressures. When governments borrow heavily, especially from their own central banks effectively printing money, they increase the money supply. More money chasing the same amount of goods and services inevitably leads to higher prices. So, the government borrows more, prints more, and your purchasing power diminishes. It is a clever, two-pronged attack on your wallet: future direct taxes and present indirect taxes through rising costs. Thirdly, heavy government borrowing can crowd out private investment. When the government enters the financial markets to borrow massive sums, it competes with private businesses and individuals for available capital. This increased demand for money can drive up interest rates, making it more expensive for businesses to borrow and expand, or for you to get a mortgage. This slows economic growth, limits job creation, and reduces opportunities for you to build your own wealth. The government, in its zealous pursuit of public spending, inadvertently stifles the very engine of prosperity it claims to be fueling. The emotional trigger here is a potent cocktail of helplessness and frustration. You toil away trying to manage your own budget, make prudent investments, and save for your future, only to have a portion of your efforts siphoned away by decisions made far away, often with little transparency or accountability. You watch as politicians promise the world, knowing full well that they are merely kicking the can of debt down the road, leaving you to trip over it. It is infuriating, to say the least, to realize that your personal financial discipline can be undermined by collective governmental indiscipline. So, the next time you hear a politician touting a new spending initiative, or bragging about a tax cut that increases the national deficit, remember the debt dance. Remember that behind every grand promise and every budgetary sleight of hand, there is a bill coming due. And that bill will invariably find its way to your mailbox in the form of higher taxes, higher prices, or diminished opportunities. Because in this dance, while the government enjoys the spotlight, it is your wallet that ultimately pays for the music, the venue, and the ever-growing bar tab. Understanding this connection is not about being a pessimist. It is about being a realist, empowering you to demand more accountability from those who hold the purse strings of your nation, and by extension, your future.
Your escape plan. Unlearning their lessons and reclaiming your wealth from the bureaucracy.
All right, brave souls who have journeyed with us through the treacherous terrains of governmental fiscal narratives, you have endured the illusion of stability, stared down the silent tax of inflation, grappled with the dubious nature of your pension, and witnessed the bewildering spectacle of the debt dance. You have seen the systems designed not necessarily to serve your individual financial prosperity, but to maintain a larger, often opaque, operational stability. You might feel a touch overwhelmed, perhaps even a tad cynical, which, by the way, is a perfectly healthy and appropriate response. But fear not, for we are not here merely to point out the financial abyss. We are here to provide a map, however crude, for your escape plan, unlearning their lessons and reclaiming your wealth from the bureaucracy. Let us be brutally clear. The government, any government, will not hand you the keys to your financial freedom. They are not in the business of fostering entirely self-sufficient, critically thinking, and financially independent citizens who might question their very operational paradigms. No, they much prefer a compliant populace, one that trustingly contributes to their systems, relies on their safety nets, and quietly accepts the subtle erosion of their purchasing power. Therefore, the very first, and perhaps most challenging, step in your escape plan is to engage in a radical act of unlearning their lessons. This means consciously dismantling the comfortable, but ultimately debilitating belief that they have it all handled, that the experts are looking out for your best interests, and that passive participation in the system is sufficient for a secure future. Unlearning these lessons involves a fundamental shift in mindset. It means viewing every government promise, every economic pronouncement, and every new social program through a lens of healthy skepticism, understanding that macro-level stability does not automatically equate to micro-level prosperity for you. It is acknowledging that the safety net is designed for survival, not for thriving. It is recognizing that inflation is a deliberate policy tool, not a natural phenomenon, and that your pension might be less of a guaranteed inheritance and more of a long-term loan to the state. This intellectual liberation is crucial, because without it, you remain psychologically dependent, susceptible to every soothing utterance from official channels, and thus perpetually vulnerable. The bureaucracy relies on your financial illiteracy and your misplaced trust. Your escape begins when you sever those mental chains. Once you have liberated your mind from the narratives of passive dependency, the path to reclaiming your wealth becomes clearer. This is not about tax evasion or becoming an anarchist. Though a healthy dose of anti-authoritarian sentiment is often a good thing for personal finance, it is about strategic self-empowerment. Firstly, regarding the silent tax of inflation, you must become an active steward of your assets. Leaving significant sums of money in interest savings accounts is, quite simply, financial self-sabotage in an inflationary environment. They want you to do this. It means cheap capital for them. Your escape involves moving your wealth into assets that either keep pace with or outpace inflation. This could mean carefully chosen investments in real estate, equities, commodities, or other inflation-hedged instruments. Education here is paramount. Learn about actual wealth-building strategies, not just saving strategies. Your savings are melting. Your investments should be growing. Secondly, in light of the pension puzzle, your personal retirement planning cannot solely hinge on government-backed schemes. While these may provide a baseline, a truly robust escape plan demands that you build your own gold mine. This means establishing and aggressively funding private retirement accounts, investing in diversified portfolios that you control, and understanding that your future financial security rests squarely on your shoulders, not on the ever-shifting sands of government promises. Do not expect them to provide for a comfortable old age. expect to build it yourself, brick by painful, disciplined brick. Finally, navigating the labyrinth of the debt dance requires you to become fiercely proactive in managing your personal financial ecosystem. Understand how government spending impacts future taxation and economic conditions, and then tailor your personal finance strategy accordingly. This might involve optimizing your tax planning within legal frameworks, making informed decisions about where you live and work, and protecting your income streams from the vagaries of economic policy. It also involves demanding accountability from your elected officials, not just accepting their assurances. Your private future is dictated by public spending, yes, but your active engagement and strategic planning can mitigate the negative consequences. Your escape plan, then, is not a single action, but a continuous process of education, critical thinking, and decisive action. It is about understanding that the game is rigged, but that you, armed with knowledge and unwavering self-interest, can learn to play it better than anyone else. It is about seizing control of your financial destiny, unburdened by false promises and bureaucratic inertia. They do not want you to be financially astute, because a financially astute populace is a powerful populace. So, arm yourself with knowledge, act with conviction, and begin the exhilarating, sometimes terrifying journey of reclaiming your wealth from the subtle, pervasive grasp of the bureaucracy. Your financial freedom awaits, but it will not be handed to you. It must be fought for, won, and vigorously defended.
Your money, your future, your uncomfortable truth. Now act.
So, there you have it, a journey through the often unspoken realities of your financial world. We have systematically dissected the grand illusion of fiscal stability, revealing your supposed safety net as little more than a sieve designed for minimum sustenance, not maximum prosperity. We have exposed inflation as the silent tax perpetually eroding your hard-earned savings while they hope you remain blissfully unaware. The pension puzzle has been laid bare, showing your retirement fund as a government IOYOU, contingent on future generations and political whims, rather than a guaranteed goldmine. And finally, we witnessed the debt dance, where public spending subtly but firmly dictates your private future and relentlessly taps into your wallet. The overarching lesson? Blind trust in official narratives is a luxury your financial future simply cannot afford. This is not a message designed for despair, but for fierce empowerment. The moment you unlearn their lessons, it's the subtle indoctrination into financial passivity. You reclaim agency over your own wealth. Your escape plan is not some radical fringe theory. It is a pragmatic, immediate necessity. It means cultivating relentless financial literacy, actively strategizing against inflation, building diversified wealth outside the government's direct control, and holding a healthy, skeptical eye on every promise whispered from the halls of power. Your financial future is not a spectator sport, nor is it a guaranteed handout. It is a battleground where informed, proactive individuals stand to win. The uncomfortable truth is your superpower, if you choose to wield it. Now, the ball is firmly in your court. Will you continue to be a pawn in their elaborate financial game? Or will you arm yourself with this knowledge and become the master of your own economic destiny? If this deep dive into the mechanics of your monetary reality has resonated, if it has sparked a fire for financial autonomy, then do not let this knowledge simply evaporate. Hit that like button, share this video with anyone who needs a wake-up call, and leave a comment below with your own insights or questions. Most importantly, subscribe to Finance Unfiltered, because this is just the beginning of your journey to truly understand and reclaim your wealth. Do not just watch, act. Your future depends upon it.